The bull market advance in gold and silver shows no indications of abating, and there are several factors that could lead to a reversal of this trend. As we go into this topic, we will discuss the significant price movements of gold and silver in this video. Now, palladium deserves recognition. With a $66 gain, it has surged more than 5% today. Palladium was discussed in an earlier video of mine. Not only is platinum up $20, but that metal is also one to keep an eye on, so I hope you'll give it a look. Although the video focuses on gold and silver, it is up 1.25%. Their growth is phenomenal. During last night's Sunday night market watch, we saw that gold broke a record here today. As soon as the Asian markets open on Sunday nights, we do that here. The price of gold is now hovering at $40, with only $40 separating it from $5,000. In fact, it gained some ground earlier in the day and eventually settled at $3,970.70. Although silver's performance today has lagged behind gold's, it is still up 56 cents to $48.60, an increase of 1.18%. It came within a hair's breadth of $49. In terms of nominal money, that is really close to a record. It is very remarkable. Even though I refrained from buying any precious metals this morning, I will warn you that you should always anticipate a price decline the moment you make a transaction. I hope they don't, but it's possible, and something I should remind you and myself of, that even in this massive bull market, something may happen. My buddies at Summit Metals will show you the ropes. We've witnessed it happen twice in the last 2 weeks. Check them out if you're in the market to purchase or sell precious metals. They have great customer service. Below the description, you will find the link. With that out of the way, there is a great deal occurring that is contributing to the rising prices of gold and silver. Several works will be cited in this section. One is Joe Rennison's more general post on the current state of the gold market, which explains how silver is profiting from gold's actions. That, I believe, is driving up the price of silver. But there is a silver lining to this financial metal, which I will touch on briefly at the end of the video. I may go into more detail about it in another video. But it's not only President Trump's interior designers that are making gold trendy again. Gold's price has soared by half since 2022, hitting a number of new records as a result of the massive influx of capital into the precious metal from investors, money managers, and central banks throughout the globe. The price of gold is approaching $4,000 per ounce, which has never happened before. By the way, when inflation is taken into account, that is an all-time high. Both of us are reminded of that. Certainly gold is in a fantastic place right now. Nominal dollar prices are moving close to a record, but silver still has a ways to go. When markets are volatile, many look to gold as a safe haven. This precious metal is expected to enjoy its best year since 1979, when it rose over 100% due to soaring inflation, a sinking dollar, and a geopolitical crisis in the Middle East. Joe is mistaken. I told you a long time ago that it had its finest year ever. When adjusted for inflation, it reaches a new record high. When expressed in terms of actual dollars, 2025 is the most advantageous year for gold in history. According to experts, the current situation is reminiscent of the previous increase, and investors are trying to diversify their holdings away from US assets due to the political instability and turmoil brought about by the government shutdown. This has led to a recent surge in the price of gold. Even if stocks have reached records multiple times and Wall Street has been looking bullish, the gold rally shows that investors are still very nervous. Just so you know, the dollar is also higher today. Traditional safe havens, such as the dollar and US government bonds, have lost some of their appeal, which has led investors to seek out gold. However, today is just one of those days when the dollar is up. In fact, I'm about to check the current status of the dollar index right this second. Throughout the day, it remained up. We'll find out if it stuck. There was a tiny retreat, I'm afraid. Now it's at 98.11, down just 0.01%. Here we are, after a brief period of resting in the 97 range. Interest rate cuts by the Federal Reserve are now widely anticipated. That too will be covered shortly. The dollar has already fallen around 10% this year, and these moves might make it far worse. Following Moody's downgrade earlier this year, concerns over the United States' escalating debt and deficits have cast a shadow over the country's creditworthiness. As a result, numerous major rating agencies no longer give the United States their top credit rating. Another scenario has arisen. The unexpected election of a leader at the long-governing Liberal Democratic Party, who has advocated spending tax cuts and reduced interest rates, caused the Japanese yen, another preferred haven, to suffer a decline on Monday. On Monday, the Prime Minister of France resigned from office less than 24 hours after forming his government, adding to the geopolitical uncertainty that had already driven down the euro and sent investors fleeing to gold for what they saw as a safer investment. The uncertainty surrounding various factors, such as geopolitical and economic developments, as well as the interest rate cycle, has been a major factor in the recent rally in gold prices, according to Ryan McIntyre, a senior managing partner at Sprott, an investment management firm that specializes in precious metals. Given this, let's take a moment to examine the data provided by the FedWatch tool. In their upcoming meeting on October 29th, the Federal Reserve has a nearly certain probability of lowering rates by another quarter point, 94.6%. To be honest, I was hoping it would be lower, but it's still in the mid-90s. Keeping rates at their current levels is a good bet with a 5.4% probability of happening. In my opinion, rate cuts will be ongoing, sure thing. Well, that's our situation. At the other meeting on December 10th, 83.4% of people expect them to cut rates by another quarter point. So that's the one to keep an eye on. So, in my opinion, we may expect a reduction of 0.75% this year. We're on, and that won't affect gold. It will continue to put the spotlight on gold as the ultimate safe haven, which is good news for silver holders. According to Goldman Sachs, exchange-traded funds that invest in gold bought more than 100 metric tons of the precious metal in September. The bank's analysts are projecting that by the end of next year, the price of gold would reach $400 to $400 per ounce. Investors have poured more money into the biggest gold-backed fund in the last 2 weeks than at any point in the previous 20 years, according to analysts at Barclays. Therefore, as gold prices have risen, the stocks of mining businesses have also risen, and most of these companies have done rather well. Despite some setbacks, particularly for silver miners, the industry as a whole has performed well, and the New York Stock Exchange Index that follows gold mining companies has increased by more than 100% so far this year. In recent years, several central banks have begun to diversify their holdings away from dollar-denominated assets and toward gold. That's de-dollarization, and it's not going away anytime soon. Analysts say private investors' involvement has given it a boost recently. Yes, a lot of folks, a lot of big money whales they call them, are buying into gold, and there's been people that are making purchases of silver to larger purchases. And I've seen it on my channel. People have been commenting that they bought a lot of silver. And so that's what's happening now. This gold has risen sharply in value across major currencies like the yen, euro, and British pound. In fact, silver as well has broken records nominally in currencies around the world already, and just hasn't happened yet here with the United States yet, being the key word with 19 cents shy of $49. That is the range within a dollar of breaking the all-time high for silver. It's pretty amazing. It really is becoming more of a strategic reserve asset, both for sovereign nations as well as institutions. According to Mr. McIntyre, people are using it as a diversifier, especially with what's going on geopolitically. And, you know, there's a deal with Hamas that they're cautiously optimistic about, but the shutdown. The government shutdown that still weighs in, and there's no sign that that's going to continue, that's going to go away anytime soon. And especially given that it's the latest factor fueling this continued increase in prices, market watchers have to do without crucial economic data released by government agencies, raising consternation and confusion about the health of the economy, especially after recent signs of weakness in the labor market. Persistent labor market weakness raises the risk of a recession or stagflation supporting gold allocations, which means that the Federal Reserve is really stuck, they got a lower rate, and they're going to continue to do that. Most understand that that's going to only bode well for these precious metals. So that's what we're looking at here. It's been quite a ride, but silver isn't outperforming gold today. I'm confused and surprised, but it's still up more than 1%. So that's what's going on. There's another factor to consider: the market conditions, specifically the short positions, which are currently under pressure. In this market report, I aim to bring you the latest news and information about precious metals. If you enjoy what I do, I hope you'll consider subscribing. I want to thank you all for watching and encourage you to rate, comment, and hold on to your metals. Folks, we're going to see $50. There may be some resistance, but I don't see how it could be much. I may talk about that in another video. I'd like to hear your thoughts on this development involving gold and silver.